in this video, I'm going to teach you how you can trade crypto using the ICT strategy. I've been using this for the last 2 years and it's been doing fantastic for me. I'll be teaching you exactly what I do to get into my entries, what analysis I do before I get into my entry. So there's 3 key things that you need to look into. Number 1 is liquidity sweeps. That's the very first thing that you need to understand. The second thing you need to understand are key PDAs. These are key areas where you're expecting price to either bounce back off or you're expecting price to go towards. And then the final thing is your actual entry. And I'll show you exactly what I use. If you stay to the end of this lesson, I'll show you exactly what I do to get in a specific trade. So let's start off with liquidity. Liquidity is basically an area that you want to look into where people are very likely to put their stop losses. So essentially, what you can see down here is a high created. After that high got created, price pulled back down. When we had this pullback down, we knew price hit into a key area. On the lower time frame, on the weekly, you've got a fair value gap, you've got some order blocks as well. So once price came back into this area, where are we expecting price to gravitate towards next? The next target we're looking at is most likely going to be the highs of this to get taken out, and exactly down here is what happened. We got a liquidation of the highs and then we had a pullback even further. This is a clear sign as well. So if we look from the bottom now, we have liquidity resting below here. Price pulled up, we need liquidity to get swept, and that's exactly what happened down here. Let's look at more recent price action. If we look at this down here, we've got liquidation down here. We had a liquidity swept just down here as well. Price pulled up and came back in. We had a liquidity sweep down here, pulled up, came back in. We had a liquidity sweep down here, price pulled up, and we're expecting price to fall back in a bit deeper now. So where do we expect price to go once we've taken out the liquidity? So that's where we need to look into our key PDAs. What you want to see is inefficiency in the market. And the way that we mark up inefficiency is by using fair value gaps. So down here is one fair value gap we can identify. Another one is down here. Let's mark on all the fair value gaps so we can see. So we can say that when price took out liquidity, price came back in to this fair value gap, and we knew this is a key area we want to look into where we can then spot reversals to the upside. Now on the monthly time frame, we won't be taking no entries. So let's drill down into the weekly, the daily, and also the lower time frames to look for what we need to see for an entry. Okay, so on the weekly time frame, what we can see is this fair value gap here. Let's mark this liquidity sweep that we had down here. And let's mark in this new dealing range from here to here. So that 50% level, anything below this 50% level is the discount side of the dealing range, and anything above it is the premium side. Usually what you want to do is you want to take an entry when going long on the discount side of the dealing range. So we can see when price came into this key region, into this fair value gap here, we can then look for areas where we can then think about taking entries. So on the weekly time frame, we had this huge liquidation. We had these weak lows get taken out down here, and then price came straight back up. That is wick fishing. You probably don't want to take an entry based on this, but what you want to see next is a sweep of liquidity, and that's exactly what we got down here and down here. So there's sweeps of liquidity down here, and this is what you want to see when you're taking entries. Let's go into the daily and let's see if we can find an entry. So on the daily time frame, it's beginning to look much better. And usually when you take entries, I normally take entries on the daily or the 4 hour. Let's look at this liquidity sweep down here, number 1. Liquidity sweep down here is number 2. This came right on the base of the fair value gap on the monthly time frame and also on the weekly time frame. So we can look into this. Let's go into this a bit more deeper. So we can see down here, we had a sweep of liquidity and price came straight back up. This is what we want to see. When we get the sweep of liquidity, we want to see a strong move to the upside. And that's exactly what happened. We had a strong move down here and price trickled his way up. There could have been an entry here. You probably would have got stopped out for break even or taken some profits from here. But if you look down here, this is exactly what we want to see. A clear sweep of liquidity down here, price came in, swept the liquidity, huge move up, and this is where we want to look for. This is our validation. This is where we think to ourselves, okay, cool, there's a possible entry that we can see now. Let's go into the 4-hour and see what we can find. All right, perfect. So there's actually two entries that we could have taken. Entry number one would have been a higher risk entry down here. So we had this huge move up, price came back in, and you would have taken an entry. You would have been in a bit of drawdown. I would have waited for the second move up. So what we can see down here is a break of market structure. We had a huge push to the upside. We had this fair value gap down here. So let's mark these on properly. I would then look for an OTE level entry. I usually take all my entries on an OTE level. So you can put your fibs either around the breakout. So this would officially be the breakout down here, this candle down here to the highs down here, or you can put it from here to here. And so you can see this fair value gap down here. You can see the OTE level down here. In this scenario, obviously price didn't tap into this OTE level. If you take entries on your fair value gaps, you would have taken an entry around the mid-range of the fair value gap and put your stop loss well below the lows down here. And now let's see where we would be looking to target. So the first target we would have had is the swing points down here, these key areas down here, which match up nicely to the minus 61.8 level. So that would be profit number one. And the second or third I would be looking at is any key swing points for around here until you get out on these swing highs down here. All-time high, then this was good 1 to 5%. Obviously, when you're trading crypto, you'll be using leverage and it will be much more higher. Let's try finding another example. So what we can see down here more recently, if I just remove this now, is on the weekly time frame, we have a fair value gap down here. We had a sweep of liquidity above down here, and price came straight back into a key PD array, and you can see that as a fair value gap. So let's dive into that a bit more deeper. On the daily time frame, this is exactly what you want to see. So we had these lows down here, a liquidation of those lows down here. So this is a good sign for us to then look for a move to the upside. Let's go into the 4-hour and the 1-hour if we can find an entry. Let's see if we can see anything on the 1-hour. So this was actually a really good entry as well. What we will look for is liquidity swept into a key area and a push up. Look how aggressive that move up is. That's exactly what we want to see. So we can see price has been moving up. We've created break-off market structures as we move up. We would have gotten an entry on this key area here, which is a fair value gap and also a OTE level. We can put it from here to here. So we can put the OTE level from the swing lows down here to the high point of here, and price came straight back into it. So we'll look to an entry on the 61.8 level, and we can have a wider stop loss. And let's look at where we'll be targeting. Again, the targets will be exactly the same. I would look for swing points first, go on the daily time frame. So first swing point that I can see is around here. Target number one. My target number two will be the all-time high swing point down here. You can take some partials from here as well. I probably wouldn't close all of my trade. I would normally leave 5 to 10%, even though that is taking out the swing highs, just because this could happen. So a price could continue moving upwards. So that is a very clean 1 to 5 again. And again, if you're taking leverage, it will be much more. So those are the key things that I use when I'm trading crypto using my ICT strategy. Obviously, it goes a bit more deeper into it, and I do quite a lot more analysis, but this is very high level. If you enjoyed this video, please can you subscribe, like, share, and comment? And if there's any specific videos that you want to see in the future, please let me know.